Hey, new location. What's up, everyone? Now, this video I wanted to make for a while, and the basic premise of this video was to kind of tell you or talk about what really changed for me as a trader. Like when I first started to trade, I wanted to understand all technicals. I wanted to understand all indicators, stochastics, MACDs, RSIs, EMAs, Fibonacci's, all this and that, right? So now I know some of you guys do look at indicators. I know some of you guys really put price action to the second. Like even if you don't put price action as a second priority, and if you're looking at price action from a primary perspective, you're still looking at indicators to see if price action makes sense, right? So the one thing that really changed for me was to understand how candles are moving. Because if you look at a chart, right? You look at a chart, you're gonna look at candles forming on the 4-hour time frame, on the daily time frame, the 1 hour, 30-minute, 15-minute, 5-minute time frame. And all these candles, they tell a story. If you're just looking at a plain chart, and if you're looking at candles move, candles form, you're gonna start to see that there's some sort of a rhythm to the way candles are forming. If, let's say, for example, if you have news events, you're gonna notice maybe prices consolidating, like printing, like the candles are printing side by side, and then there's gonna be some news event, and then you're gonna see candle move higher or lower, right? At the same time, if you put enough focus on candles, you're gonna start to understand like how candles are making higher highs and higher lows, because essentially, like by default, when we're looking at a trend, we're looking at trend to say, okay, there's a line comes down, goes up, comes down, goes up, comes down. That's all perfect, but when it comes towards realistic analysis on price action, that normally doesn't work, because majority of us, we don't have the discipline or we don't have the risk appetite to kind of hold trades while price comes down, goes up, comes down. That's just the truth. So I looked at it in a way that, okay, if price is going to move up, maybe candles are going to print higher highs and higher lows. Like a candle is going to form, and then there's going to be a next candle which will make a higher high and a higher low, or a lower high or a lower low to go down. So once I really started focusing on candles, I started to understand that, okay, now if a candle is forming in a certain way to move down, what's the probability that the next candle will continue to move down? Or what's the probability that the next candle will continue to move up? That's it. That's all what you got to look at, right? And when I was really starting to look at price action or candles and trying to see where my TP is going to be or where my stop loss is going to be, it was very simple. If I'm looking at the 30-minute time frame or the 1-hour time frame, I know for a fact that if I'm trading gold, a 30-minute candle will be approximately 25 to 30 pips. If I'm looking at the 1-hour candle on gold, that may be 25, 30, even 40 pips, right? So if I'm executing based on the 30-minute time frame, I know I can get at least 15 to 20 pips out of it. And if I let a runner run, that runner may move into the 1 hour or the 4-hour analysis that may get me 45, 50, 60 pips. So understanding candles, the way they're moving, I never looked at maybe my TP should be at a certain area, because I'm more of a fan of, securing profits. As the profits come, just secure profits, 1 trade or 2 trades, secure profits, move on to the next day. Do the same that day, then move on to the next day. Because at the end of the day, if you're looking at candles, candles all have probabilities. The way they form when market opens, the way they form before news events, after news events, before a breakout, at market close, at round, London Open, pre-London Open. Whenever there's a big move, the candles will literally print in a way where you can look at it and you're going to be able to tell that, okay, if we're forming in this way, there's a higher probability it's going to go where I think it's going to move. And that's where you execute. And a lot of people, maybe there's lack of confidence. I'm not going to say afraid, because that's maybe the first thing that comes to your mind, that you may think, oh, what, I'm afraid to execute. You're not afraid. It's just lack of confidence. Because once you have lack of confidence, then you're not going to be able to execute on the trade. But when you do have confidence, and that comes from watching the same thing that price does over and over again. And once you do have that confidence, then you can execute, right? Because you understand that there's a higher probability price will move in my favor. Okay, so price action was the only thing that really helped me get confident to execute my trades. That's it, nothing else. Absolutely nothing else. Price action, 30-minute time frame, 15-minute time frame, 1 hour time frame, confirmations on the 30-minute time frame, very important, very important. I will very rarely look at confirmations on the 15-minute time frame because 15-minute confirmations are weak confirmations, right? Because it's the weak time frame. Always, most of the time, the 30-minute time frame, very strong confirmation time frame. Like a lot of traders they still don't look at the 30-minute, but I think it's one of the most powerful time frames for confirmations. It's much stronger than the 15-minute. It's almost as strong as the 1 hour time frame. So 30-minute confirmation time frames, they work best. They work the best. There's not much that I focused on to become profitable. It was just price action. Just price action. And man, in the beginning, I used to look at EMAs, the 14, 21, 100-day EMAs, Fibonacci's. We used to do divergence on RSI and MACD. It was just hilarious what we were doing, man. We were doing like Bollinger Bands and stuff like that. But ever since I just focused on price action, also at the correct time. You know, it's not like you're gonna just open up your chart on random days and just be like, okay, like, you know what, I'm just gonna focus on price action. No, it wasn't like that. It was like, okay, when do we have volume? If we have volume at certain times, I'm gonna look at price action at just those times. That's it. You know, and the more you do it, the more you focus on just clean charts, clean patterns, clean candles, the more you're gonna understand trading. Because once you start to look at price action when there's no volume, when price is choppy or they're not like, you know, moving, the candles are printing side by side, and you're forced to do analysis, it's never going to work. Sometimes when you come to the charts and you're like, okay, within the first few seconds, you know whether price is going to go up or it's going to go down. Those are days where you really capitalize and you execute with volume to get a high monetary gain. But when you come to the charts where you see candles are printing side by side, then you know what, price is just ranging. Like what are you going to do at this point, right? Nothing. So clean price action, that's what basically worked for me. And if that has worked for you, amazing. If you still want to go with indicators, that's totally fine. But that's what really worked with me. It worked with a lot of our students. It worked with a lot of our viewers on YouTube. So, just try it. Try it for a month, I'd say, right? Try it for a month, see how you feel. And if you do get results, man, good for you. Time to make a trading plan and good luck.